Hello everyone. Today probably marks the record of the highest number of stock that is gapping up more than 5% pre-market. Since set up this pre-market screen up, I'm not sure whether if today is really the highest number or highest number day, but it definitely is one of the highest. Yesterday I said it's time to buy the pullback. And man, this oil is like literally 3 seconds after I closed the stream, and it went down by like, I think 0.5% or even more, 0.9% in 1 minute. I plan to wait for the possible reversal during the stream, but I'm seeing it starting to like try to push higher, and I think maybe it's not today. Maybe I need to wait a little bit. Maybe I just need to wait 3 seconds more. I think, yeah, this candle is what I'm trying to stressed, emphasized yesterday. So it tries to push higher, but the breakout failed and closed below the 9 EMA, which is a sign of weakness. So this kind of right at the previous high, 116, 117 level, and I actually shorted a little bit on oil on the. I used USO on this 5-minute candle around 142.40 ish, and I closed the short pre-market. So it's around, I think it's a 15-hour trade, which is super nice for just one day. I think it's probably, I think it should be this or this candle around this 114 high 114 level. Well, I think it's not 15-hour, maybe 10-hour. So today not planning to do anything because the market is just getting up by 3%. It's not a good day to short when the market is gapping down. So like Thursday here. So on the other hand, it's not a good day to enter the longs when the market is gapping up. And I think we'll see don't think the market is going to go straight up from here. But if it does go straight up, guys, it's very welcome. And yesterday, the BMNR and coin that's the importance. Like this is the really good examples of following your stock. Coin is around 0.1% to hit my stop. Q is also 0.2% from being stopped out, but it bounces and not yet hitting my stop. Yeah, car shorts maybe the only thing that I will be trading. Probably 280 or even 300 mark. This previous highs will be a good level to watch, or maybe even now. Like it attempts to take out prior day high. Looks like it fails. Looks like collapse from here. Maybe I would take a shot. Now it's a little bit like the spread is too wide. I'm going to wait a little bit, I think. Crypto also. Before this candle, the close of this candle, I want to see the close of this candle, because if it reclaims the 50 EMA at the close, that would be a really nice shakeout, a really nice pin bar, maybe. So actually, it looks pretty ugly before the close of the candle, like when it starts going lower. But you have to be patient and wait. and maybe a little bit imagination too. And that's the shakeouts um, below the 9 and 21 EMA that I'm looking for. So similar to here, to this day here, maybe this day here. So yeah, and I think yesterday is the best. This is the best timing. This is the best day to enter the longs. And now to extend it, I'm just going to wait. I'm not going to chase the gap up. And I've already like 200% margin. This semi ETF, this SOX is gapping up 6%. Twice of its ADR, more than twice of its ADR. So now CAR is also building a similar candle to oil yesterday. Try to push higher. Take out private bar high. After a huge move, I hope it can go. You can accelerate it further a bit. 270 to 80 will be the best. And we're seeing huge volume. You can see 5-minute bar is, I think, the largest volume since this move. Actually, since 2021. The gigantic exhaustion candle. Okay, stopped out from the first. See whether it can push higher. That will be even better. And then we are getting close. We are getting close. I'm considering shorting this breakdown. Actually, yesterday has a first flush. Late day it recovered the bulls are fighting the take back. So that's already one failed breakdown, and I think it actually increased the odds of getting one real reversal, like a huge reversal in the coming days, if not today, in the coming days. Ooh, getting stopped. 3 stops in a row. Yeah, and I agree. I think the market pullback could favor the car short. Now it's riding the 9 EMA. Push a little bit higher. Get another breakout. Get another extension. Like the volume is pretty high. 5-minute candle, 15-minute candle. This is a sign of distribution. At least some. So it just starting to lose the 9 EMA. So it looks like they failed to hunt my stop. The market maker or the stop hunters failed to hunt my stop at the moment. Maybe the next candle will be a 6% candle back to the upside. But yeah, it was so close to being stopped out. I hope this is the top. Not sure whether there gonna be another undercut and reclaim, or but if it stops me out and then continues grinding, like going up to 300, that will be an opportunity that I'm willing to take maybe 1 or 2% for one position. Like this will be the one of the best opportunity if it can goes to like 330 or something. And now it's also like it's hourly charts are looking pretty good already. I want this 1 hour close to be weak. Hopefully closing red or at least at the lower half of this candle to confirm the weakness. Yeah, so yeah, I can talk about a little bit about Nebius entry yesterday. Before I end the stream, I was telling that I want to wait for a pullback, like a breakout and then a retest on the anchor VWAP and the 9 EMA. But like yesterday, it was so tempting to to enter Nebius, and so it's actually you can consider it as an intraday range or an intraday flag breakout around 113, 113 level. Hourly chart, not that not a tight range, not a really tight candle actually. But like I'm focusing more on the theme, on the stock itself, instead of the setup or instead of the whether the chart is looking really nice or not. Because the market, like the good opportunities are often doesn't come along with a great chart. And I think I have to adapt to make some adaptation to it. Yeah, and one of the reasons that I entered Nebius is I entered it with the oil breakdown. So the oil just have this 15-minute reversal and close below the 9 EMA that I think it could be the potential top. But the candle itself is a little bit wider than I expected. Uh, yeah, when I saw this oil candle breakdown, then I think I have to find some logs. And the Qs are thing 11:15. Yeah, it is doing a 15 minutes reversal, 15-minute candle breakout near the daily 9 EMA. I think it's below the 9 EMA, below the 50 EMA on the hourly chart, but it's not at the close. So it's still, I think it's actually have more than 45 minutes, around 45 minutes left. So if Q skin this breakout is valid, like this is the potential higher low, then the hourly candle could be a undercut and reclaim of the 50 EMA, and it could potentially lead to a reclaim of the 9 EMA on the daily chart. And some of you may notice I'm a little bit bearish on oil and a little bit, maybe not a little bit, I was quite bullish on the market. I'm just waiting for the collapse. And when I saw this candle, I think it could be worth it to enter the longs. And I think Nebius is definitely on my radar since this reclaim, undercut and reclaim day, last Thursday. I failed to enter it on Monday. Then yesterday, this intraday entry I think will be tight enough. It's only 1% stop. So if the market it comes back, I'm just losing I think maybe 2.2% of my account. But the risk is really small. But I think that's the edge of setting a tight stop that you can try with a small amount of risk. So even if you get stopped out, it won't be a big deal. But if it works, so something I'm not saying it could potentially going up to maybe 150 in the coming weeks, but like if it really works, it could be it could provide me a really good risk reward. The potential risk reward is huge. Looks like car is rallying back. Is it? So Chris already I think Chris loves the entry of the retest of the anchor free one. I think this could be it. I think probably Christian is trading this candle. Maybe. Probably. And for this, how much is this move? 200% move on a not that much, but I think it's still valid for a purple short. How I use margin, I don't consider like how to use the margins. When you entered like maybe 4 or 5 positions, maybe each with like 25% of your account, then you will be on margin automatically, like naturally. To hold overnight for the Nebius trade from deadline considered no. I don't care about the news at all. I don't watch the CNBC. I don't watch the Financial Times. I don't watch CNN. I don't watch Trump's Twitter or something. The only thing I care about is the charts. And those are the noise. Those are really the noise out there. Yeah, you'll be on margin if you run out of money. Exactly. Yeah, I use the trader workstation from IBKR. Um, yeah, I understand. Like there could be a gap risk for like certain events to happen, especially the events that announced um in advance. So everybody would know like Trump is going to say something yesterday night, but actually couldn't. There are several factors that I would consider like first I have built some profit cushions since like over the past months, and my positions are working quite well. I think that's the hints of like market is telling me, yeah, the longs are working quite well, and I think may mm, then I could take more risk because I have a little bit more profit cushions in case if there is a gap down. I'm sacrificing some profits for my open positions, for my new positions. But actually, I don't I don't I don't even consider like yesterday's like the Trump speech. And if something is announced in advance, like people already know that this date could have something could happen. Generally, they are being factored in mostly, especially the bad side. I think the past week is the great examples of the market refused to go down when the new news headlines are still bad. Like they're still talking about the oil is going up to 150 or even 250 by I forgot which investment bank is the analyst is saying the oil price could go to 250. But the market is printing the green candles, undercut and reclaims. And IWM is the leading one. Like IWM is already above the 21 EMA for several days. Well, then that's the second retest on the anchor VWAP. Maybe the intraday VWAP too. Yeah, intraday VWAP with the anchor VWAP on the height of day. This is, I believe, one of the best level to take the shots. But definitely this one undercuts like uh it's not undercut. It overshoots the anchor VWAP quite a lot by almost 2%. Yeah, but I think it will be a great entry if you are simply like shorting above the anchor VWAP, like some maybe high 260s. If you see the selling the selling pressure coming in, or maybe you were going to short this candle, but it's a little bit too wide, like in my opinion, for this stop. Just for my style, like I think a 3% is still a tight risk for many traders, but just for me, and I am reporting the performance on USIC this week. I mean last month. So I think I will report quarterly this year, and I'm trading the same no matter I'm joining USIC or not. SPY possible to sell that huge gap up. I think yeah, it's I consider it a little bit. I think it will be a favorable factor for this car short. But even if the market is not it's not going lower, like if even the market maybe, but I'm not sure. Like if, for example, yesterday, I'm when I'm looking for the pullback buys, maybe I would not consider shorting car yesterday. And probably maybe that's uh also the reason why the car reclaims the lows and continues ripping higher yesterday too. So yeah, I agree. Like the market, the indices are playing certain role. I think it like I'm also uh fine tuning my style or trying to like evolving or modifying my style a bit like over time. And I think the market pays more a higher and higher, that contributes to a more and more important role in my trading. Maybe yeah, I agree. Like pullbacks with tight stop works better in the current environment. Like currently currently like the breakouts are not giving me tight stops. The stops that really tight. Yeah, like it's hard to find. And I think the market keeps changing, and I'm just I'm just going to find an entry tactics that I could set the tightest stop possible. Right now, I think the pullbacks is working pretty good. The next pullback buy area, I don't know. I think we need a few more days. It really depends on how strong the market is. Yeah, maybe 50 EMA the anchor free up area is okay. With the hourly 9 EMA chasing like the following higher, so maybe 599, 598 between the anchor free up and the 50 EMA maybe. Do you think it's a good idea to trade both long and short? I don't know. It really depends on your own trade feedbacks. Are your longs working? Are your shorts working? If both are working, then it's a good idea. Like don't listen to other noise. Like I'm not important. The traders on Twitter are not important. The news are not important. Your trade are the most important. How do I sense it is a pullback area? Why is this yesterday but not the day before yesterday? The day before yesterday is at the 21 EMA. It's an up day. How could it be a pullback day? And so if Qs are starting a new uptrend, if this is the bottom, at least for the short term, generally the Qs are going to ride the 9 EMA higher, right? So every uptrend or every new uptrend or on a stock or on the indices on anything. So the first thing that they need to do is to stay above the 9 EMA, because 9 EMA um is the quickest, like it's the fastest EMA that I'm using. So it has to stay above the fastest EMA first. There's a new uptrend developing. So when the market or the stocks pull back to the rising 9 EMA, if there is a new uptrend in the coming weeks or months, that it generally would find support. And if it doesn't find support, then probably it's going to head lower or it's going to chop. There will be a lower probability. It's definitely not zero, but it will have a lower probability of not respecting the support. Like in this case will be the 9 EMA. Like it will be it will have a lower probability of not respecting the support, like it close below the 9 EMA and then close above it on the next day, and then it start and continues the uptrend. It could possibly happen, but it is just is in probability wise. I think it is a low probability. Market has performed a undercut and reclaim of the 9 EMA on Thursday, and it really like captures my attention. Like adds a little bit confidence on this pullback buy. Yes, yesterday. Yeah, Q I entered it also yesterday on the 15-minute breakout 117. The pullback into the end of VWAP and the 9 EMA 15-minute breakout. I mean 15-minute candle breakout. Yep. So really nothing fancy, nothing complicated. I think in trading you have to the clearer, the simpler, the easier the rules or the setup is, the better your trading will be. Imagine you have to did an complicated calculation, or you have 10 rules to consider, to evaluate before you enter on a trade. That will be your decision making will be really difficult. The BMNR in coin is a little bit like anticipation on the cryptos 4-hour reclaim. Like as I have, I think it's the similar idea. Like if Bitcoin or the Ethereum is going to find support, like if it's starting a new uptrend, it's going to find support near the 50 EMA. It has a higher chance to respect the 50 EMA. And I think I've gone through the past moves on stream. Like when you, for example, this one, when you're starting to look back, this is a similar period as we are in yesterday. So this one also undercut the 50 EMA, but reclaims on the next candle. And so if a stock, if a crypto, if in commodities, if anything wants to start a new uptrend, generally it has to respect the support, or in this case it's the EMAs, and on a lower time frame. You have to find support on the lower time frame before you find support on the higher time frame. So what if yesterday, like the cryptos are not starting a new uptrend, they are heading lower, they are creeping down, then I will get stopped out. But it's only 1%. Like this stop is only 1%. So it's actually less than 0.3% of my account to risk. So I'm risking a small amount to get a high potential. So if the cryptos are not going to find support here, then I think there will be a high probability that it's not going to start a new uptrend. Do I adjust my entry strategy for each individual stocks? I think so, but I think it's only slightly different. But most of my entries are like really similar. Mostly are near the 9 or the 21 EMA. And AAOI, this one, I think this also one of the, I think I got quite lucky on this one. It didn't stop me out on the Monday. If looking back, I think the best, a better entry could be yesterday on this 15-minute breakout, or this 5-minute breakout. Oh no, this one. Yeah, I also used to be the one to wait for the pullback to the 9 EMA, but it never happened. It really depends on the market. Like in the past 1 to 2 years, I just simply, most of the leaders are just riding the 9 EMA all the way up. there's a really few like really tight ranges and a tight and breakout entry with a tight stop. So there's a lot of wicks near the EMAs. Many of the time they kind of touch the EMAs and then they rally back at the same day. And AOI is the stock that's moving too fast. Like it's trading at 13 ADR and it's very liquid. And I believe a liquid stock has a higher potential of a new leader, of becoming a new leader. Even like a true market leader type is going to make maybe 500% move in 3 or 6 months. How do I enter car? Given that yeah, that's why I got stopped out 3 times. I think you missed my first 3 entries. I definitely not striking this thing. Not did a perfect strike on this one. Sometimes when the lower time frame is chaotic, like zoom out a bit. 15 minutes, 1 hour daily. I don't limit the number of trades for a single stock. Like limiting the number of trades is more useful when you're maybe not having that high of a conviction that how this trade is going to work, or where are you going to pick your entry, and to definitely avoid over trading. But I kind of get used to it. I learned from my past experience dozens of time. So right now I would I would find out I'm overtrading whether I'm overtrading or not much quicker than me before. And I think the most the more important part is not the number of trades that you've taken, is uh you're entering, like your entries are great or not. Are you entering at the right time? So like for example, you're if you're if you're shorting somewhere down below, then that's not a good trade. Like your stops would be wide. It's actually like you're entering from FOMO, and that is worse. That is worse to getting 3 losses in a row. So crypto is rejecting at the 50 EMA, also the daily 9 EMA. Not a fan of this action. I think I will consider closing the cryptos long if they starting to close below the 4-hour 9 EMA. Now it is you're coming, like they're pulling back into the support. We'll see whether they found support or not. I think today or tomorrow will be very important. So on the other hand, if cars starting to break out from this at the free web level, then I will close the short. I'll probably use the previous highs, like 264. Do I love to explore day trading? Not really. I tried day trading when in the first or the second year when I started trading, and I'm not trading well, and day trading doesn't quite suit my personality. But actually, I think more and more entries recently that I'm using are the intraday entry. That could be like that is a little bit relevant to day trading. So yeah, I think it's a good thing to merge different style of trading into one. Looks like car is not going lower. Fastly, 15-minute range breakouts. But I don't quite like to take the days. That I'm probably not going to take it. If Fastly, like if this day happens yesterday, like if the chart of Fastly, what it's doing right now is actually happening yesterday, that I would be buying this one. But maybe this one could work. I think like if you enter Fastly on this breakout here is definitely okay. Watch lists, and I will I will include the stocks in different themes, even some slower theme like DAL is in my watch list, but definitely most of them are the fast moving stocks, especially the tech stocks. But there are some like DHI is also in my watch lists. So if crypto finds support and keeps building higher lows, Circle could be another one. Will be another stock that I'm interested in. So the yellow watch list is the mega cap. Tesla is very weak compared to the leaders. Even inside the, yeah, but right now like the leaders are mostly the semiconductors. But I believe like Tesla maybe for the next quarter or like this year could set up for a certain uptrend. Weekly is like building a really huge, like a VCP type of a base. I think this is a good time to close the stream here. So Car could make a move. I think if I keep streaming, Car is going to chop here, not going anywhere. So we'll see whether the market can find support or not after a huge gap up. Could this be a lower high? Like actually, back in 2015 or 2016, like this type of a market is going sideways for 2 years. Maybe we'll get something like a gap up, a huge gap up, ran up for 1 week, and then starts selling off and starts another chop for 2 months, and then another sell off. Anything can happen. So I think no need to get too excited or get FOMO, even though the market is gapping up and a lot of the names are gapping up. And I believe there will be another chance. There will be chances for you to make an entry. And from my experience, like I never ran out of entry ideas during a uptrending market, during a boom market. I only ran out of buying power. Like in a really good market, there will be tons of opportunities. So before I end the stream, I will move my stop to 300 after I end the stream. So any market makers that tries to text me out and start the before the real reversal, prepare for a 300 stop. Okay, I'm going to raise my stop to 300, and if the stop is coming to 290, then I'm going to raise my stop to 330. Feel free to stop me out. So we'll see tomorrow, and let's see. See you in the next one.